Yeah, good morning. Yes, the US saw a marginal decline. In fact, during the markets hour of India, the futures were down, and to that extent, even the US market were also down. So nothing new in that. Today morning, futures are marginally positive. But if you see the Asian market, Hong Kong and China are down, whereas the other markets are plus. Hong Kong and China are mainly down on account of decline in the tech index. In Hong Kong, the tech index is down by around 3%. And there is some again fear of some lockdown in China. Shenzhen is seeing some increasing case of COVID, and that may lead to some lockdown. So that is leading to some fear over there, and the index is down over there. Apart from that, if you see the commodity, oil had seen again move up. That is now it is at around 104. So some concern in the Libya, and also talk about reduction in the production by OPEC plus. So that is leading to oil price moving up. It's now over $104. If you see the steel and the iron ore, they are also down. Steel is down by almost around 2%, and iron ore is down by around 3.5% in China today's morning trade. So overall, seems more of a marginal up or sideways movement expected in today's trade. Tomorrow again we are not working, so there will be fear about the development in the international market, so people may not be carrying very large positions for the coming period. Now I'll request technical team to take up from here.
Yes, thank you. So good morning, all of you. This is Swati. Yesterday, we have seen that the Nifty has opened with the gap down, and somehow it manages to maintain a support of 17,170 level, and Nifty managed to maintain a positive closing above 17,300 levels, which gives a relief sign as of now. Going ahead, looking towards the global market and the European markets, Nifty is likely to open on a positive note, and we're likely to witness some sideways movement during a day. On the technical front, currently Nifty has a very strong resistance at around 17,370 levels. If it surpasses that level and it's maintained a positive closing above the same, then we can witness some pullback rally into the Nifty, which might touch the feet of 17,470 to 500 levels on the higher side. Whereas on the downside, 17,230 will be the immediate support level. If it's break that level on the closing basis, then the selling pressure is likely to be intensified, which might take a Nifty towards 17,100 to 17,000 levels, which will act as a very strong support levels. So just hold on your long positions with the mentioned stop losses. The view will remain cautious. At the higher levels, we might witness some selling pressure. Coming towards the Bank Nifty, for the today intraday purpose, the immediate support is placed at 38,200 level. Below that level, we are likely to witness some selling pressures, which might take a Bank Nifty towards 37,900 to 37,800 levels. Whereas on higher side, 38,650 is the immediate resistance level. Any move about that level, 39 levels can be seen at the higher levels. Coming towards the Nifty Finance, 17,300 is the basically first support level for the Nifty Finance. Below that level, 17,200 and 17,000 levels can be seen on the downside. Whereas on high side, 17,500 and 17,600 will be the crucial resistance levels for the Nifty Finance. The overall view will remain cautious on both the three indices, but definitely the market, we are witnessing a very good momentum into the stock specifics. So whatever the call we generate, either it's a buy or the sell call, just maintain the positions with the strict stop losses. Any dips towards on a downside towards 17,000 level will be the good levels to take a fresh long positions. But as of now, the view will remain a cautious as long as Nifty trades below 17,500 levels. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. Good morning, everyone. So as per derivatives data front in yesterday's session, we have seen that as per the wide positions around between 17,300 to 500 strike call positions are continuously increasing. Against that, we are seeing that at 17,500 and 600 level put order positions are getting liquidated. So this is a cautious sign in the market. So for the market to become a strong and to see a strong bullback, if Nifty goes above 17,500 and gives a stability of close above 17,500, then we might witness a strong pullback towards 17,800 to 900 level. But currently, the view is a bit cautious because we are seeing that India VIX also yesterday increased sharply by 8% and giving closing around 19.80 level. So once if India VIX goes below 18.5 level, then again we might say that volatility is likely to decrease in the market and buying momentum to get generated in the market. So hold your long positions with the support of 17,300 on the closing basis. If Nifty gives closing below 17,300 in 1 to 2 trading session, in next 1 to 2 trading session, then we might expect the profit booking to increase towards 17,000 to 16,900 level on the downside. As per the stock specific and sector specific, from the positive front, we expect Colpal, India Cement, and MFSL. These three counter looks positive and on the downside and negative front, we are saying that the PL, Canfin Home, and Bank Baroda. This three counter looks of negative for next 1 to 2 trading session. Thank you.
Good morning. On the news front, Ashok Leyland has said that they will be launching the electric light commercial vehicle within next 6 months. And they have also said that they will ensure that they have a full range of products available across alternate fuels like CNG, LNG, hydrogen, and electric. This will be in their new company Switch, which will focus on these new technologies. Also, company yesterday launched two new products, Bada Dost I1 and I2. So both the news are positive for Ashok Leyland. Thank you.
Good morning, everyone. L&T Technologies wins a 5-year deal from BMW Group in infotainment domain. The deal size is not known. This is positive to LTTS. Thank you.
Yeah, we attended yesterday con call of Transpect. The outlook seems comparatively positive, but not very large positive. In fact, in this quarter, the result, the revenue increased sharply by almost around 73% year on year, but gross margin declined to around 42%. Generally, the gross margin is around 50%, 47 to 50%. The reason what the company had given for decline the margin is their margin is fixed based on the per kg basis rather than on percentage basis, and the prices of the finished product and raw material has increased very sharply. That's why the margin has come down, and some impact of mix of product which can improve in the coming period. Apart from that, similar is the case with EBITDA margin also came out. Apart from decline in the gross margin, the impact was also on account of higher logistic cost. These logistics costs are likely to come down in the coming period, so that can improve the margins. Currently, the company is operating at around 92% capacity utilization. As such, utilization increase is limited possibility from here. Company has done some incremental capex, but that will be very marginal. The key thing to watch in this is when the company announces large capex, because that will be the determining factor for the future growth of this company. Otherwise, the current capacities are currently fully utilized. So incremental growth from here will be limited. There are possibility of some margin expansion. So in the near term, stock is likely to remain sideways or marginal up move can come into the stock. So overall outlook is neutral for Transpect in the near term. Long term possibilities are that the company is into development stage of around 5-6 products, and if any of the product get a good CRAM opportunity, then definitely the company will do good expansion, and then it can add up to the value. So long-term possibility of the outlook is positive. The company is into chlorine-based compounding. So that is, and got niche technology and all. So that is a positive part of it. So long-term outlook positive, near-term can remain sideways. Apart from that, we like one stock, that is Muthoot Capital. The company came up with good number this time, but the slippage continue to remain high. As such, the stock is near term has not performed well. But what we see that being the festive season and Onam coming in the Kerala, this quarter seems to be very strong for them, and which will have a very high uh, there could be a high growth possibility in this, and even the management has targeted for a good growth in this quarter and likely to reach pre-COVID level, which will translate into a very sharp increase in the disbursement in this quarter, this year. In fact, the company is targeting disbursement of around 1,700 crores, which was hovering around 300 crores per quarter, that is around 1,200 and all. So there is a good jump expected in the disbursement in this year. Apart from that, the key concern was that of the NPA. Since the company is into two-wheeler, the NPA recorded in the COVID period was very high, and company has also taken one very sharp write-off in fourth quarter. So what the company has indicated that going forward, the slippage or the credit cost will be coming down very sharply. They are expecting 1% credit cost, but that will have an impact of write back also. So normalized credit cost will be around 2%. And if we see just Q1 result, even in the Q1 result itself, the ROA was around 2.8% and ROE was around 14% on trailing basis. So apparently looks very attractive on valuation of less than one-time book value. And we may see with the coming next 1 or 2 quarter good results, there is a possibility that this stock can move up very sharply. So it's a value buy at current point of time. So outlook for the company looks positive. Company name is Muthoot Capital Services. So now I'll request commodity team to take up from here.
Yeah, thank you, sir. Good morning, everyone. Yesterday, we saw that gold silver, however, opened low, but somehow managed to close above the support levels, 51,000 in gold and 55,000 in silver. So, as far as these levels are holding on, we recommend to buy on dips. So buying on dips is recommended in gold and silver as long as holds 51,000 on closing basis, and silver also 55,000 on closing basis. Crude is expected to edge further higher. One can buy around 76.50, 76.70 levels. It has breached the resistance zone of 7,600. So prices are expected to test 78, 78.50 on the higher end. So buying on crude is recommended. One can also go for a buy-in option call of 7,700 or 7,600 CE. Can buy around 370, 360 levels with a stop loss below 330. Prices can test 470, 500 on higher end. Natural gas has opened 2% down, but we expect that if 720 is holding on, then pullback can be expected till 745, 750 levels. So there could be a range bound movement in natural gas as long as it is holding 720. One can go for a buy. Metals, base metals are expected to trade weak. So copper have resisted 672 levels on higher end. So selling on rise is expected. Pressure could come in at 660 levels, 668 levels. So selling around 668 with a stop loss of 673 is recommended. Zinc too has opened a gap down. So again, pressure could be witnessed in zinc. 312 is a immediate support. So a pullback maybe can take prices till 315 16, whereby again selling pressure could be witnessed. So it could be in a range from 1312 to 1316. uh, and aluminum too have opened cap down. So 210 could be a immediate support. So buying for a pullback is recommended. But however, profit taking should be witnessed from 213 odd levels. That's it from me. Ria can brief you on currency front.
Good morning, everyone. The headlines. The Biden administration have announced $1.1 billion in arms sale to Taiwan. Now, we have already seen the highest Pelosi, the highest US personnel Pelosi visiting the Taiwan, and this created quite a rift between US and China. And now US going forward with 1.1 billion arms sale to Taiwan, with which includes the support of 650 billion dollars for radar and 90 billion for other arms and ammunition. So I think if this deals goes through, it could further strain the relationship between US and China. Dollar index has remained above the 108 level. 108 levels. This is indicating that there are still a lot of uncertainty right now into the world economy. Uh, if you look at the euro, well, the ECB has done rate hikes, but I think this time they have to go forward with a major rate hike and of around 75 bips. This will be the biggest rate hike that could be done by the ECB right now. And looking at the statements from the Jackson Hole Symposium, I think 75 bips is actually needed, taking into consideration the kind of uh, pool of problems that the whole eurozone is right now into, tackling the inflation, the energy crisis, and so forth. So I think rate hike is needed, but but things to consider with respect to the eurozone is the major inflation that is coming into the economy is due to the energy crisis. So while the energy prices have softened into US and other developing economies, it has not done this. It has not reacted the same way into the eurozone. So they are still tackling with the high energy cost. So unless that comes down, the demand for the energy comes down, the inflation, I think, will not soften as much as we are expecting, even with the rate hikes. For the India, well, India will be uh, uh, April to June quarter numbers are due for the Indian economy, and I think looking at the numbers with respect to inflation and the other projections, I think we could see a jump into the second quarter in GDP growth for the Indian economy. RBI's projection is at 16.2%, but I think it will miss that mark, and we could see it coming anywhere between 12 to 14%. So that will be a positive thing for the Indian rupee. In today's session, we have already seen quite a volatile open for the USD INR, and it is still trading above the 80 levels. If it breaches the support of 80, it could head towards 79.85, 79.70 in today's session. So look for the breakdown of that level for the USD INR. For the other pairs, Euro INR and pound are witnessing some pullback into the today's session. I think it will be a very restrictive momentum, though into the bullish region. So 80.36, 80.40 is the max upside that one could see into the Euro INR. For GBP INR, I think it will be a struggle to maintain a bullish leg. So consolidation to a slight uh, upward momentum could be seen. 94.06 is the resistance for the GBP INR, and 93.54 is the support. So that's all on the currency front. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.